Hello, everybody. Welcome to Wednesday. The S&P 500 was down 1.6% today, unfortunately, and really kind of opened up down based on the earnings from last night from Google and Meta and Microsoft and such. And actually, again, I thought the revenues and the earnings were really good, and the guidance wasn't terrible either. There was a few categories with some of the AI areas and ad sales for Google, et cetera, that people were picking on. But really, I think, if you really look at what's going on with the market, again, a lot of times news is kind of attached to what's happening to the market. And so we could be going up and they'd be talking about the great revenues. We're going down. They're talking about a few missed areas for some of these companies, that kind of thing. The Federal Reserve came out today, said that they were going to hold rates where they were, of course, and really push back against a March, rate cut. The market had kind of already accepted that. That was down to, about a third, 33%, 35%, possibility anyway. It was at 80% a month ago. So obviously the numbers that have been coming out have been really good. Friday's numbers will make some difference with the jobs report that's going to come out. So we'll see how that plays out. But uh, really, the market is very much so still expecting a rate cut in May. There was some pushback against that too, in my opinion, just in listening to the question and answer period. And they kind of talk in code, so sometimes you're kind of trying to figure out what they're saying. But nonetheless, the market does expect like a 91% probability of a rate cut by the May meeting, but it's going to happen this year. I think if you just look at the big picture, interest rates are, steady at this point and not going up. There is talk, and matter of fact, the Fed said they're willing to lower rates, just waiting for the right confirmation on the inflation picture and what have you. Uh, and the economy is doing spectacular. They talked about that. Basically, Chairman Powell said, "Look, we have very strong growth last year, and inflation is falling at the same time, and unemployment is still at 3.7%. I mean, that's a really, really good scenario to be in, considering all the other things that are happening." So, uh, the market coming down 1.6%. One of the things that happens on a normal basis when you get a big breakthrough, like we had, we've spent a lot of time finally breaking through to a new all-time high. You often get a big run, which we've had, and then a normal pattern would be to retrace back down to the top of that breakthrough. And if it's going to be successful, then you break off of that, and the bigger run and the more sustained run comes off of that. And so, I think we're probably going to see that. We're not that far from the top of that breakthrough point. And, we'll maybe not right get there or what have you, because there's a lot of people maybe anticipating that too. Again, it's a fairly common pattern with breakthroughs. And actually trading on breakthroughs is a really, common way to make money in the stock market too. So that's one of the things that a lot of people do, pay attention to. So I wouldn't worry too much about what happened today. We are in the middle of earnings season. We've had, a great run so far, even for the month of January. Even with this downturn, January has been really good altogether. So I'm very pleased with what's happening with the market so far. So anyway, look forward to seeing what's going to happen tomorrow, and we'll look at some of the different earnings that have been coming out here too. So talk to you then. Thank you.